After the close yesterday, Moody slashed the US sovereign rating from AAA to AA1, and the market immediately tanked in after-hours trading. Looks like that pullback we've been waiting for is right around the corner. Emily, your SQQQ is about to pay off big time. With more than 70% of our portfolio in cash, we can finally do some serious dip buying.
Yesterday I was calling SQQQ a hot potato. Today it's suddenly the hottest ticket in town. The dip opportunity is here, but how do we avoid buying halfway down the cliff? I bet that's exactly what our viewers want to know.
First off, let's pat ourselves on the back. When the market was walking a tightrope 2 days ago, we had the patience not to rush in. Yesterday, we also nailed down 3 trading principles. Basically, stick to names with defensive, non-correlated price action. How far could the sell-off go? Let's give the verdict up front and save everyone's time. Over the next 1 to 3 months, SPY faces 4 possible paths. Technical pullback. SPY is about 6% above its 20-day average and up roughly 12% in 4 weeks. Very stretched. Add the buyback blackout and seasonal tax outflows, and there's a 45% chance we drop to around 560. High-level chop. Range bound between 585 and 600. CPI is a mild 2.3%. The Fed is on hold, and 2 cuts are priced in, but the forward PE is 22, so bulls and bears cancel each other out. Probability 25%. Rake to new highs. A push to 610 to 625. 15% chance. If jobs data softens, rate cut bets pull forward, the dollar slips, and tech soaks up flows. Deep correction. A slide to 540 or lower, also 15%, triggered by an inflation rebound, oil spikes, heavier treasury supply, or a geopolitical shock. Bottom line, we're leaning toward either chop or a technical pullback, so plan your risk accordingly.
Great analysis, but you didn't just pull that out of thin air, right?
Of course not. We crunched a ton of historical data and scoured every newsfeed. The exact quant model? Trade secret. Can't spill that.
So do we wait for SPY to hit 560 before buying? Viewers want to know?
We can't just camp at one price. Waiting to all in at a single level is way too risky, especially when a big headline sets the drop in motion. I'd rather track the 2-hour chart. Once we see a key bottom pattern, say a D9 followed by a higher one, we'll start nibbling. Big event sell-offs rarely finish in one wave. Usually we get at least 3. SPY could fall to 570, bounce to 580, then roll to 560, or it might term up right after 570. A small time frame reversal can morph into a big time frame trend change, so we need flexibility to avoid missing the entry.
This isn't the first time. Including today, we've had 3 sovereign downgrades. The last 2 triggered sharp pullbacks. Details aside, there's one fun fact. After the 2011 downgrade, TLT actually surged because panic money piled into treasuries. The big question now is, will TLT repeat that move? Could we see another big rally?
Here's our 3-way outlook for TLT over the next 1 to 3 months. Base case, sideways, price between 85 and 88. 10-year yield, 4.25 to 4.55. GDP is minus 0.3 annualized. CPI 2.3, lowest in 4 years. The Fed is on hold and still shrinking its balance sheet, and the downgrade lifts term premium, odds about 55%. Mild rally, break above 90, 10-year under 3.9. If jobs weaken, core inflation stays below 2.2, and the market prices at least 50 BP of cuts, odds 25%. Further weakness, slip under 84, 10-year above 4.6. If inflation reaccelerates, energy or tariffs push up prices, supply floods the market, and auctions flop. Odds 20%. Most likely we tread water, but we'll keep a close eye on data, inflation, and flows.
Right now the odds favor TLT staying between 85 and 88. It's a solid hedge when equities are extended, but with long-term inflation expectations rising, TLT isn't attractive to hold for the long haul. My plan is to unload it near the high end once the market confirms a top or a verified pullback, then rotate the cash into SPY or QQQ for the next leg up.
Thanks for watching this episode. If you liked it, don't forget to hit like, leave a comment, subscribe, and share the video to show your support. See you in the next one.